everybody. My name is Hank Levy. I'm the Treasurer Tax Collector of Alameda County. I'm here with Mika Hankins from our Assessors Department. I'm the Treasurer Tax Collector. This is first of a series of podcasts and videocasts that we're going to do, and we've named it for now Tax Talk in Alameda County. I chose today's topic. It only affects a few 40, 50,000 of you out there in Alameda County. The topic today is business personal property taxes. And I chose the topic today because those taxes are due at the end of this month, but because the end of the month is on a weekend, it's not due until the first working day, so they're due September 3rd. So it's not a topic that affects everybody, but we thought it's interesting. It's not talked about a lot, so I thought this would be a good one to have as our first. As I said, my name is Hank Levy. I've been Treasurer Tax Collector for 7.5 years now. Before that, I was a CPA, Certified Public Accountant, and I know from the my client side, from the taxpayer side, what it's like to have to report on and pay these taxes. And Mika's going to introduce herself, and she's going to talk about her background as well. So Mika, why don't you introduce yourself, and then we'll sort of set the stage and talk about taxes a little bit, and then we'll get specifically into these taxes.
Sure. My name is Mika Hankins. I'm the Chief Deputy Assessor for Alameda County. Just to give a little background about myself, I am a graduate from Cal State Hayward. And
I am too.
Okay.
All right.
I still call it Cal State Hayward. It's Cal State East Bay, but my degree says Cal State Hayward, so I'm going to stick with that. So like I said, I'm an accounting major from Cal State Hayward. I actually graduated from there doing nothing that pertained to accounting. I started as a supervisor in a call center for AT&T. Did that for about 8 years and decided to dig into accounting. And from there, I went to work for the IRS for only a short time, about a year, but I was there as an agent. I decided to become self-employed as an enrolled agent and prepare taxes. So I did do that for a number of years. From there, I found myself here at Alameda County. I started as what's called an auditor appraiser in the assessor's office in the business personal property section, which I understand we're going to get into some of that. Mm-hmm. But yeah, started as an auditor appraiser, moved on as a supervisor of appeals, which is actually where we met. I don't think you remember me, but we met when you were on the board.
I was on the assessment appeals
That's
board
right. That's right.
of Alameda County for 15 years.
Yeah. So that's actually where we first met, and I remember you. But from there, I moved on to be the chief of appraisal division in the office, and now my current position as chief deputy.
We might have had some of the same instructors at Cal State.
We might have, but don't ask me to remember any.
There's a guy named Phil. I almost went to work for the IRS. But so that was some work. Yeah, I never did it.
Yeah.
So it looks like we have a similar background here, and I'm aware that again, and we're talking to small businesses out there. We're talking to businesses in general, and most of the businesses are smallish, and we know that there's a lot of compliance, that small businesses have to do a lot of compliance. You have to report and pay income tax, you have to report and pay payroll taxes, which includes workers' compensation and unemployment compensation. You have to report your gross receipts to the city, or if you're in the unincorporated county of the county, you have to pay me, our department, business license fees. You have to pay sales tax. And then finally, there's this thing called the personal property taxes. And before we kind of talk about it, my office, as you probably know, we don't use the term business personal property taxes. We use the term unsecured taxes. Now, unsecured it's involved. It's a little bit broader than business personal property taxes. Unsecured taxes are just sort of the opposite of secured taxes, which is what I'm known for. That's property taxes on your real property. Unsecured taxes is things that aren't attached. They're not secured. They're not part of not attached to land. That's unsecured, and it includes more things than just business personal property taxes. It includes taxes on mobile homes. It includes sometimes secured taxes can become unsecured once somebody sells the whatever secured it. So anyway, so we call it unsecured. So we have some data on unsecured. It may not completely be the same as your data on business personal property taxes, but let's start talking about what is business personal property taxes? How would you define it? Who has to pay it? Give it a shot.
I'll give it a shot.
All right.
And I want to say for anybody out there who doesn't know what business personal property is, don't feel bad. My first day, I had no idea what I was going to be doing and why. So if we start at the first step, and that is all property in the state of California, per the Constitution, is taxable. And that's what a lot of people don't know. Property in general is taxable unless exempt. So anything that's personal property is not real property. And as it pertains to business personal property, that is any property that is owned, managed, used, possessed in the conduct of a trade or business.
So let me ask you a question. So personal property, which does not mean personal, like I own it personally. It means it's not real property.
It's not real property.
It's not real property.
Yeah,
Now,
that gets confusing.
Are you saying like my personal iPad? Actually, this is not a personal iPad. It belongs to Sarah. But anyway, if it was, if I owned it as an individual,
Yeah.
I would be taxable on this?
That would be exempt.
That would be exempt.
It's a personal effect.
Otherwise,
so
if it's not exempt, otherwise I would have to pay taxes.
That's
on it.
correct.
Okay.
That's correct. Ginger here is actually exempt.
Ginger.
Yes.
She's attached. She's attached to me.
But she is personal property, but she's exempt. Pets are exempt.
Specifically.
Specifically, yeah.
Okay, sorry, I didn't mean to interrupt.
No worries. No. Where were we? We're talking about.
Yeah, what is it? Who has to pay it? How does it work?
Okay. So all businesses basically have to pay this tax. If we're just speaking about general businesses, any businesses in Alameda County have to pay this tax. And what it means is, for example, if you have an office, your desks, your computers, your supplies, office furniture, any sort of equipment that you use towards your business is taxable. And by California Tax and Revenue Code, did I mix that up? California Revenue and Taxation Code. Thank you. Help me along.
RNTC.
Yes.
Yep.
So we have a section called 441, which basically mandates and requires all business owners to file a statement every year if you own $100,000 or more in assets. So that is a requirement by law. However, there's another requirement when you must file, because you might say, I don't have that much, so do I have to file? And the answer is, yes, you still do. You are not required to file annually. Most times our office will reach out as a courtesy. We have a discovery process for all businesses in the county, and we will reach out to you and give you a notice. And if you receive that notice, that means you do have to file as well.
Now you used a threshold of 100,000.
Yes.
That's only for annual reporting.
Yes.
Is there a threshold underneath which people are exempt or don't have to report or pay anything?
Right. Not exempt, but you may only have to file every 3 years. And so that's where the requirement where you will receive notice from our office that will let you know that you have to file. But initially, you are required to report to us that you are a business, you have started. And I want to clarify that $100,000 is in cost. So that $100,000 that you total as in cost that you own, you are required by law to file annually. But you are not required to file annually should you be under that threshold.
Okay. And all businesses, even if they have $1 are required to report and in theory pay something. Is there any
In theory.
low asset value exemptions, or like there is sort of with business license taxes or with real property taxes, there's a $10,000 threshold. Is there any low asset value threshold for which people get exempt?
Correct. We do have a low value threshold in Alameda County of $10,000 or less. And I want emphasis on value because you mentioned value. There's a difference between value and cost. So if we backtrack a bit, as I stated, you are required to report the cost of your assets to us. But what our office does is that we will calculate fair market value. Based on those costs that you report to us. And that value is the basis for the tax that you will pay, which is approximately 1%, depending on your area and where you live. But that is the basis for the tax and the bill that they receive from your office. And again, this is based on what you report to us, what we know about you, what you own in your business. And this is as of what we call our lien date, January 1st of every year. So that's important as well. It's what you own as of 12 a.m., January 1st of every year. That is what the basis for, we would calculate the value of your assets.
So do you suggest that every business, at least if they think that they're under the $10,000 value threshold, that they should communicate with your office and at least sort of put that out? Don't just ignore.
Right.
Don't ignore this.
Yeah. Don't assume or know that your value is 10,000 or less. We have to do that calculation. We have to assess the value of your assets, and we will put you under that low value ordinance accordingly. But as you stated, even if you own $1, you might think, oh, I don't need to. It's, we don't have to do it. You always have to do it. Let us determine your value. You still are under that requirement to file regardless.
I had, when I was a CPA, Mika, I had a client who was a therapist, who, in therapists, they have a couple chairs and a couch, and
that's it.
That's it. And but she ignored your notices. So by the time, you just kind of you scared her and told her that I think she had like $50,000 worth of assets, and she said like no way. But it's like it was sort of like a little pressure to come on in and tell us what you got.
Yeah, that's a great story because you don't want us to estimate. And that's exactly what will happen if you don't give us your information. We could be spot on or, we're taking it again, it's an estimate. So always file, even if you think you don't have to. Do not ignore us.
That's right.
Yeah.
And the form is called the 571L.
For general businesses, that's
correct. For general
correct.
businesses. Are there other forms?
There are other forms that fall under the umbrella of the unsecured, as you mentioned. There's different forms for apartment complexes because they also pay a business property tax. Boats and aircrafts, they fall under that. So there's different forms for them. But if you are a general business, yes, 571L is the form.
Okay. And those are due, as I recall, like in May?
They are due April 1st.
April 1st?
Yeah. So May comes in.
Are they late? And when are they late?
Yeah, so that's May 7th. So
May 7th.
Yeah, they are due April 1st, but you do have until May 7th to file. If you don't file, then a 10% penalty will be applied to the value that we do calculate.
Right.
So it's very important that you are on time and you don't allow us to estimate because you might fall into a category of an estimate along with the 10% penalty because you are required to file. Yeah.
And it's a tough time of year for professionals and CPAs. I remember I'd get done with my income tax deadline on April 15th, and then I realized I had to turn around and get out some 571Ls, which aren't, sometimes can be no fun.
It's challenging, yeah. And you're lucky. As an accountant, I didn't even know about 571Ls because my small businesses didn't know.
I think that's true.
So that's very common.
I think it's very common. I think it's very common for small business advisors and some CPAs not to know about.
Yeah.
Well, we're gonna come back and talk about compliance in a minute. So we're talking about the rate of the tax. It's about 1%. It's actually the same rate as the real property tax rate, isn't
Correct.
it? But not bonds. Is it just,
It's just a flat rate of
it's just a flat rate of
1%.
1%?
Yeah, and then anything over that is dependent on the bonds based on
It
your
does have
grant.
bonds. And it doesn't have all those special charges and special assessments.
No.
At some point, another podcast I might do, it will be to explain your property tax bill, which is way
special
more
assessments,
way more complex than this bill. But
Correct.
anyway, it's around 1%. And the way, and just, we can come back and talk about this later, but, and the way it's broken up is the exact same way as property taxes, is that the 1% gets divided up between the cities, the school districts, the county, the special
Schools, yeah.
districts. So, yeah, so just everybody knows that. And I try to put that into the tax bill so people can know that. So let's talk about, is there compliance? Because as you said, you didn't know, and I know when I became treasurer tax collector, I went to my gym and I said, I won't mention their name, and I said, so you are paying the county your business personal property taxes on all this, on these rowing machines and these spinning bikes that I'm using, right? And he said, what is business personal property tax? So,
Right.
so what do we think about compliance?
Well, I will tell you that about a third of all of our, let's say, general businesses, they do not file. So we have about 30,000 statements and or notices that we may send out to these businesses telling them they need to file, and we will get, roughly about a third of those people who do not file, failure to file. And that falls into that category where they may receive an estimate and or a 10% penalty. So I think it's a combination of people who do not know, or maybe, the estimate is correct and a lot of people don't want to touch it. I think it's a combination of both, to be honest.
Yeah.
But I think a lot of people don't know what these notices are, what this tax means, until, there's an issue that comes up.
And it's probably small businesses.
Yes,
For which
majority are.
I'm sure your department assesses the cost benefit of doing a lot of trying to go after them, because they're likely to be tiny businesses that would pay very little in dollars, and you're probably trying to figure out if it's worth it.
Yeah, that is correct. It's mostly the small businesses, but what we are doing, what our office is doing now is trying to do a lot of outreach, particularly for these businesses that, are not filing. We have our staff going out, knocking on their doors, handing them statements, explaining, what business personal property is, encouraging them to call, and of course, encouraging them to file. So that's how we're trying to counter that, just, to keep people informed, because a lot of it is they just don't know.
Yeah.
Yeah.
Yeah. Yeah. And if there's anything, my department can help you with, let us know. I don't have any, it's not as if we have tons of people out there.
Yeah.
I was doing a little research. Do you have any idea how many businesses you think are out there? I know how many unsecured tax payments we receive. I can kind of extrapolate a little bit into how many of those are BPP. So I'll tell you our data.
Okay.
In 2022, our data suggests that we collected taxes from 44,500 businesses. And in 2023, it actually dropped substantially to about 41,500. Are those kind of numbers? Do you know your numbers?
Are those businesses or unsecured?
That's unsecured.
Okay.
That's our unsecured taxes.
Okay. So I think that's about right. Like I said, we have about 30,000 general businesses. What you see in that as well is our boats and aircrafts. And that includes commercial and general. That is some of our higher value accounts as far as those commercial aircrafts. So that's in there as well, and that is accounted for, those accounts that you're seeing in there that may not be all businesses. But I can say in general, I don't recall the data from 22 and 23, but for our 24 roll, BPP closed at about 27.8 billion in value. And if you just want to look at, I believe, the unsecured, it was about 20.8 billion of that was unsecured.
What was it? Tell me the value again. What was the value, the assessed value?
27.8 billion.
7.8 billion. So at 1%, if we're taxing, because I also know about how much we collected in unsecured, which I think, if I can do the math in my head, it makes sense. We collected about 200, in 2022, we collected about 287 million. In 23, although the numbers dropped, we collected over 300 million.
Yeah, that sounds about right. If I'm looking at all of our, what we call our BPP accounts, which aren't just businesses, that sounds about right based on the value that we assessed.
Yeah, and for small businesses out there, if they want to know more about this, they should talk to their advisors, their financial advisors, talk to their CPAs, their enrolled agents, who may need to be educated.
Right.
The county has a resource. I'll give you the URL. It's www.acgov.org/business/dbiac.htm. Maybe we'll put that up when we release this podcast. What about your relation? Maybe we should also talk briefly about the difference between business personal property taxes, which are paid to the county, and business license taxes, which are for the most part paid to the cities, although for those businesses in the unincorporated part of the county, they also pay us. Those are different things, and sometimes maybe people get confused. I think maybe there's more, I would say, if you ask me, more people know about business license taxes that they have to pay.
Of course, yeah, because that's something I think as you're starting a business, it's just one of those standard things that that you have to do. For whatever reason, business personal property doesn't come in there somewhere where, they know that that's part of starting a business. So I think that is all well known as far as a business owner, what you're supposed to do. And they do get it confused when they call our office, and we do need to explain the differences.
Yeah. So either your office or I know both of our offices, the people on the phones are really good. They're very helpful. We won't punish you.
Right.
We'll try not to punish you. Are there any excuses? Can people say, if people want to come in from the cold, are there any excuses? I didn't know.
We will be sympathetic, and we will try to,
You'll give a lollipop.
Yeah, exactly. And we will try to best explain so that they're well informed. But it is an expectation as a business owner. You do need to know these things. And that's why it's good you do these things, a podcast. This is helpful. Like I said, our office tries to do outreach as much as possible to inform people, even on how to file. There was a time our assessor made sure we were doing the outreach and going out there and just letting people know even about the form, how to file. So we're trying to do more of that. But, we won't punish you, but we can't let you out of that requirement if you are to file.
And we're trying to make it's as easy to pay your business personal property taxes as it is your regular secured regular property taxes. You can pay by check. You can pay through your bank, through what we call an ACH. You can pay on a credit card. All these options are available on our website. And we encourage you to pay. If I could make a recommendation for people how to pay, it would be through ACH. It's free, doesn't cost anything. It's a lot easier, save money on postage. So that we recommend that way to pay. You can pay by credit card. You'll pay right now a 2.3% interest rate. It's all the same ways to pay as you do real property taxes.
And if I could just add, it's very important not to wait on our office to reach out to you. If you are a new business owner, and at whatever point that you start your business, please contact our office. What you don't want to get to is a situation where our office just discovered your business, but you started, 2 years ago, because, by law, we are allowed to go back to that year in what's called an escape assessment, and basically assess you, and you are responsible for that year that you started business, and then, those years going forward. So very important, from day one that you do contact our office and figure out how you do file.
And I hope that the revenue officers from our cities are cooperating with the county
Mm-hmm.
and informing people, because as we said, business license taxes, people tend to know about them and
Yeah.
are more compliant with those. And I hope that those offices are also, I don't know if there's brochures or they're verbally telling people that they should pay. I hope that relationship exists.
Yeah, I hope so too. Yeah, I hope it's getting out there because I know when I was out there, I didn't even
Right,
know.
right.
So I hope so.
Right. Well, anything else?
I don't think so.
Okay, I think that's it. Thanks very much. We'll be doing more podcasts soon. We'll let you know through this channel. Again, this is our first, and we hope you liked it. And we'd love to hear your comments. So I know when I listen to podcasts, it's like subscribe below, make some comments. I don't know if that's going to be the case here. Anyway,
Like this, I think, right?
like this. Thanks very much.
Yeah, thank you.